So big news came out after hours on Friday, so kind of sneaky there by them, but Moody's downgraded the U.S. credit rating due to increase in government debt per CNBC, as you can see there. And also, if you see another post that Cheddarflu did over here, there was a large sell, $2 billion worth, a couple minutes before that news came out. So this person sold it, or not person, it's institution in this case, because via the dark pools, we don't have access as retail traders. They sold $2 billion worth of shares. And then over here, as you can see, the last time a major credit agency downgraded the U.S. was August 1st of 2023, which preceded a major correction, as you can see over here beforehand. So this one is a bit different. I'm going to go into why I believe this is actually more so of a buy the dip opportunity. However, we did see a decent amount of downside after hours on Friday in fears that this would lead to something like we had seen previously in August of 2023. So I'm going to go over a couple of things here. First of all, hedge funds bought global stocks on Monday of last week at the second fastest pace in at least 5 years, as you can see from over here. So very high level of buying. And if you look at it from a relative basis, like to the last time where we had just about the same level of buying, this was end of 2023. From over here, you can see around December, very early December. And if you remember during that period, there was a substantial rally, specifically that October 27th low that produced a kind of like a melt up rally into 2024. So very key there. Also last week, we did have the PPI data come out. This is a bullish development because you can see here that it is dropping over time. This inflation has been dropping for a while. Now, the expectation, at least what's being priced in right now that I've seen on Bloomberg, is about 3% average for the year 2025. So we'd expect at some point in the summer, end of summer time period, that this would start to go up again. However, I believe that to be priced into the market at the moment, as long as there's nothing crazy, this is both CPI and PPI related, as long as it's nothing crazy, then it shouldn't be anything meaningful for downside, kind of like what we saw when inflation was skyrocketing and we'd have major down days in the equity markets just because of that whenever we saw CPI or even PPI come in way over its expected rate. So just keep that in mind there. As for another bullish development here, U.S. companies are buying back stock at a record pace right now. So the repurchase announcements through May 2nd are at the highest level ever thus far. So insane amount of buybacks. And that's always a good sign for the market, not just from the actual buying of it, because obviously that's going to appreciate the price of these companies, but also the sentiment side. They wouldn't want to be buying if they believed their company to be severely overvalued in the market. So that is a good sign. As for some bearish aspects, because obviously with the downgrade from Moody's, we did have the U.S. debt burden heading toward its uncharted territory. The projection right now is for 2029, it would exceed the 1946 record high of 106%. So there's definitely some debt ceiling pressure in the future, even more so than before. And Trump and Congress are going to have to limit the deficit and debt blowout when they're already like 6.8% and 100% of the GDP. So that's another issue altogether for the future. And then they'll have to face potentially higher interest costs because of our interest rates right now. So that is going to be an issue down the road. Do I believe that will have an impact in the short term though? No, but later on, most definitely. And then lastly, over here, we can see the University of Michigan Consumer Index, Consumer Sentiment Index rather, is at lows right now. So you can see even during 2008, during the Great Financial Crisis, it was at a higher level than we are right now. Only time that we were lower was actually recently, a couple years ago during the 2022 correction. And I actually have a hunch that this has to do with information on social media being so accessible to everybody. So I can get onto that in a later day. But this is what I'm looking at right now, all of these factors in the market. I'll go back to the chart. So I'm back on the S&P 500 here. Again, we did see a decent drawdown after hours. It actually eliminated all of the gains that the S&P 500 made on Friday during the day for OPEX. And again, yes, is there a lot of fear mongering out there with something like this where we saw a major downside after the downgrade from last time? Certainly that's the case. And it seems like that was a lot of the fears because no one really takes Moody's that seriously. However, they were the last of the major credit agencies to downgrade from a AAA. So that's, of course, not a good sign for the long-term prospect of the United States. However, again, this is something I think will be buy the dip in the short term. So as for levels for this week, we're going to look at a couple different options here. First of all, actually, I will bring you to SPX because this is what I left off with from the last video. We had a couple things to look at. For example, 5,540 was that area that needed to hold for more upside. We held it, no problem. It didn't even have to retest it, and we continued much higher. We actually broke by the last level that I was interested in, which was 5,778. Remember, this is the lower end of this range, this 3-month range from back here. You can see this is where it found support, and this is also where the breakdown occurred, plus the retest of the breakdown and then crash afterwards. So this level is critical. We gapped up over it very easily. No issue whatsoever, and then it continued to grind higher. So as long as this is defended, I believe we will see 6,102. This is the same level that I've been watching since we were even below this 5,540 level, this uptrend. And that was the main target of reclaiming the uptrend. So I believe that there's a lot more upside that we can see. 6,102.97, my level up here. That was the previous high of this range, hence why I have it. So dips will be buyable as long as we're above 5,778. This 5,856 level is the best one in my opinion. I'd like to see a long opportunity there for a variety of reasons. One, this was where the range found a lot of support mid-range, so to speak. So of course, the lower end of the range was down here at 5,778, but over here, there was numerous days where we saw support. You can see 3 over here, 1 over here, another one, etc. And then over here was a resistance after it broke down. So I do like this level a lot because of that, because we know historically in this range, it was a prevalent level that produced various bounces and rejections. So looking for something like that. Also, at the same time, if we use Fibonacci sequence for just this sequence alone, this post 5,778 world, we can see over here from the current high, which was the high end of day right before the drop, we can see that there is a nice golden pocket that is forming near term between roughly 5,870 and 5,890. Additionally, the market has liked to wick and find a liquidity grab under lows, like higher lows on the way up. This is a higher low now of this sequence, this multi-day sequence over here. So in the past, we've seen, for example, I could draw it out here, but we've seen something like a drop down and then it goes to wick under a meaningful low like we had from over here. You see that wick candle and then picks up after. And essentially this acts as a stop raid where you see liquidity grab. There's a lot of orders like to sit, stop orders specifically like to sit under higher low levels because they're key support levels. And you see market maker take them out intraday and then rip it afterwards after they take their liquidity. So in this case here, that's something I'm looking for. This would be right under the golden pocket. We've seen a lot of golden pocket breaches intraday, but then they pick up afterwards where the daily candle picks up to close above something like the 0.5 retracement. So I like this setup where some type of a low is forming over here and then a pickup candle back into the golden pocket. Would be interested in longing something like 5,856. If we broke below that, this would be the lowest level I'd want to see it around the 0.382 over here. If we fell below that, then it would flush back down to actually retest 5,778, which is the next long opportunity. So that's my plan for this week, looking for some type of strategy where I long over here off of minimized risk. If it breaks below, this would be the secondary long for higher. And I believe something like that will produce 6,102 eventually. So that's the plan. Also for the bullish sentiment, despite what we saw after hours on Friday, I was looking at the flow for last week and we really didn't see that much bearish SPY flow. It was mainly honestly neutral, if anything. Obviously, you could see here 52% to 47% calls to puts, but there was no meaningful SPY flow at all. Regardless, you could see over here a decent amount of premium in these, but these are also in the money and they have a ton of time on them. It expires in December later this year. So nothing super short term. And you can see also complemented by something like this that was a short dated contract, 1.1 million for the 590 strike. So nothing insane at all from last week. No insane VIX calls either. You can see over here just a couple of them, but these were just two meaningful ones. We always like to see a lot more when there's consistent amount. That typically you're going to see some type of volatility spike. So there really wasn't that much premium in the grand scheme of things, wasn't a consistent amount. So isn't meaningful at all. If this were to change this week, then I can change my opinion on that. However, as of now, there's nothing to really point at a lot more downside. I believe this will be a buy the dip opportunity from this Moody's downgrade. So that's the plan. Now, the last thing I want want to mention is Bitcoin, because we actually saw a lot of MSTR. So MicroStrategy, or rather their new rebrand, it's called just Strategy now. Saw a lot of call prints on this one, and short dated too. These expire later this week on Friday. So 5/23, that's the expiration for this week. $9 million call order. Even though it is in the money, this is a very short dated expiration, so it really doesn't matter that it's in the money, in my opinion. This is a bullish bet in the short term. 1.5 million for the 420. That's out the money by a decent amount. You can see spot price was 396 the time they bought. So 420 is a decent amount out the money there, and just a lot of premium. Very rare to see this on something like a MicroStrategy. And what's interesting is I found this tweet by this guy over here Against Wall Street on Twitter this weekend, and he mentioned that over the weekend, a $276 million 40-time long position on Bitcoin with a liquidation price of $95,000 was executed in the market, as you can see from over here. So this guy's very bullish. In the past, when we've seen these highly leveraged long positions like on Ethereum, there's typically news that comes out afterwards. And this is basically an insider trade just in crypto world, where things are a bit more of the Wild West. So they can get away with more of that, even though we've seen a ton of insider trades in the market this year. So really both are the same at this point, but found this interesting because of what we had seen previously with MSTR. So wanted to look at Bitcoin's chart as the last thing in today's video. So go down to it over here. As we can see, there's a nice breakout in the short term from this downtrend over here. So we have a current downtrend on this consolidation breakout over there. Also, this is a major momentum play as well, because we can see then a very nice upside move so far. Inverse head and shoulder from lows. Not only that, if you remember from the videos back in beginning of April, we had this nice uptrend. I was looking for the reclaim of the uptrend for a lot higher, for 100,000 as a target. We did reclaim that, so it's continued to go up well past 100,000. It looks like it's ready to make its next leg for 108,000 to 112,000. I believe that to be the target of this breakout of a downtrend here. And also, these MSTR bulls are bullish on Bitcoin as well in the short term. So it looks like that would be the obvious move here to see something like that. I've been bullish on Ethereum as well. Believe this one can continue to appreciate as long as it stays over its own uptrend, which is actually even longer term of an uptrend. Goes all the way back to the 2022 lows. So as long as we stay above that, I believe 3,400 is in the works, which may sound excessive, but we've seen in the past, crypto land can have a lot of big moves in a short period of time. And this is a very bullish setup. Inverse head and shoulder at a low. Extremely rare to see something like that in crypto or equities for that matter. But then we also reclaim this uptrend. So very bullish on that. And good to see these bullish developments. Crypto has been leading equities, which is another reason to be bullish, more so in the near term going into summer for equities as well. So anyways, talked about a lot today. If you found a certain component of this video interesting, let us know in the comments below, or if you have any questions on it, we can reply back to you. Otherwise, I'll see you next time.